Okay, welcome back. This is another video. This video is gonna go, I'm pretty sure it's gonna just get added on because it's not a bad video into the mentorship, and it's also gonna get put on YouTube. So this is how to backtest. This is my backtesting software. You can use whatever you want, TradingView, or there's FX Replay. I use Trader Casa. Just started using it, and since I know how to use it, I use it. It's free, but the problem is there is sometimes a 30-second ad, which is the only kind of downside to this. But these are my two accounts that I'm backtesting now. As you can see, they're both on the same date. This is small or, so 1 to 3, 1 to 4. It was 142,000. We've taken 3 L's. Uh, that's 42,000 profit on a 100k account. And this one is high or. So as you can see, it's not pulling in the same numbers because it's a bit more riskier. So I guess smaller or is good. But that's how you backtest. This is already just me showing you, but this is already how you backtest. You backtest, you can two accounts depending on your strategy. If you can see that your strategy has really small stop loss and you're trading maybe a very high confluence strategy like on a 5 minute time frame, and you're seeing that you can hit like 1 to 7, maybe it's you can't hold till 1 to 7. Or maybe you're really aggressive and you're trading everything with trend against the trend. So if you're trading against the trend, maybe you can only get 1 to 3, 1 to 4. That's how you backtest number one. So then we kind of get to that's kind of the more advanced way, is when you know how to backtest. So let's just open another one. So on this one, you just open whatever you name, whatever you want, your example. Backtest a 10,000 account, because if you're backtesting, you're more than likely not good at trading just yet. Or maybe you are and you're just refining your strategy or testing a new strategy or perfecting it. But you should practice on what you would be using, which is 10,000 or whatever you're using, 20,000. You choose your date and then obviously the year, let's say 2025, the 12th is a Wednesday. Now, this is how you backtest faster, and don't waste your time on a backtester. People take sometimes like 3 hours to test out two trades. Like I can do that in 10 minutes, find the trade, in the sense of like this. You know your strategy. So now on the top left, you see I'm on the 15-minute time frame. I have this. This is like you have this on everything. It's like your how fast you move, like what time frame you move. So I put it on the 15 and then 5 minutes, so not too fast. We check the date. Okay, let me just match this. I need Germany, Amsterdam, whatever. Where is it? It's +2, I think, here. Okay, so basically we can see we are now on the 12th of February. It's 12 o'clock. So Wednesday just started. Okay, we know we do not trade Asia, because Asia is just an absolute finished session. At least for me, I hate it. And uh, also, it's because it's during the time I sleep. So if you are from Europe, you are sleeping during that time. So take your rest. You don't need Asia. If you're in America, whatever, or Asian, you can trade it. But I've never backtested the Asia session, and I rarely know anybody that trades Asia session. So you need to learn what time you if you're in the mentorship, you know this already. If you're backtesting, you should know kind of your basics, and the basics is a session. So we know that London starts at 9 o'clock for me on this time. That's 8 o'clock UK time. So I mark out the time London starts, right? And you're not gonna watch this. There's no point of skipping on the 1 minute and watching for trade. No, you just press play and you just skip all the way to London Open, because this is realistic. This is where you wake up. This is where you wake up and you get on the market. So I'm at the place where I want to be. So I switch this back to 1 minute to not switch through. And then from here, I see I'm at 9 o'clock, and then I do my analysis. So the first things first, you have a news tab at the bottom. For me, you open Forex Factory. I'm actually not fully sure if you can see. You can't see this, I think. Yeah. This is the news tab. So what day was it today? It's the 12th. You check the news and you see, okay, 2:30 is news. There's no bank holiday. There is elections for Greece. So basically, London session is not going to have any dangerous spikes. At least it shouldn't. So it's free to trade. So then that's where you say only Wednesday you check. Okay, we've got big CPI news. So one, potentially London's going to move a lot, because later it's not going to have volatility. It's going to be just very calm, waiting for CPI explosion news. Also, Fed Chair Powell and Trump. So CPI is a very big news. So it's either maybe London will move a lot, then rest, or it won't move at all, or it will move bad. So you have to know this in advance and just be ready, and not to expect 10% win, like a 1 to 10 or on this day. You need to just, if you want to trade calmly and simply how it is, how you look and how you always trade, or lower your risk because it's a news day, or skip it. It's whatever you want. But that's the no, step number one, is you check the news for the day and see if you are even free to trade, because sometimes the London session can be just absolutely full with news, and you just skip it. So no news. So now I'm at 9 o'clock, okay, which is New York time, my time, not UK time. So then, let's say your strategy is liquidity. So then I would mark out first my direction, because I want to know where we're going. So just from a quick look, we are looking like we are bearish, but here we switch to bullishness. The last liquidity sweep on the daily was this. It went up, started to drop. I want to say that I am bearish, potentially, because the time frames are showing bearish. The 4 hour here is bearish. We have reacted off of a POY as well, I think. Not yet. If you maybe if you mark out this pink candle, yeah. So we could potentially also be bullish, since we swept that liquidity. We went up and now we're dropping. So I can see bearishness. I'm gonna just check how the market is moving. Then I have some liquidity points. So when I look around, I just see liquidity swept is all to the upside. For example, this, that, whatever. And there's liquidity to the downside that has not been swept. I open my 15. I check out what's the story now. We have a big move up here, explosion. So this is liquidity, and we've stayed within this range. This is Asia for you. You see, as I said, this is like end of New York, before bed. So you have still had a small explosion, and then from here, this is just all Asia. It's nothing. So yeah, we don't want to trade that. So then I think here, it's a Wednesday. This would be Asia high, so I'd mark out my Asia high as well. This is just automatic, I know. That means this would be Asia low, somewhere in here, not here, because this is Tuesday. Also, this is here first point of liquidity for me, because we pushed up, and that's our 15-minute low. We were pushing down to it, then we broke up. Maybe potential liquidity sweep of this, and maybe this high got swept. Maybe we're gonna go for this huge wick to take it out. So then you basically just whatever, check out for your strategy. You open the market. We're in Frankfurt now, so I wait for New York to open and see what is gonna happen during New York Open. So New York opens, and as we see, Frankfurt swept Asia low. What am I saying? Asia high. Frankfurt swept the Asia high that we had marked out. So we could be potentially ready for sells, but also we see that we have exploded past Asia high. So then at the same time, we could, like I said, be bullish for short term and keep pushing up. Either way, from my strategy, I need liquidity sweeps, and the only liquidity we've got swept is at the top to sell off. So I'm still on the sell side. And now after Asia high, we are making POYs to sell off. So then I wait. I will not tell you why I enter, because that is part of the mentorship if I enter. But I will show you an example of what you could have entered. Um, okay, let me see. This is basically my strategy. Yeah. Okay, so my entry would have been in here. Um, I'm not saying why, because people pay for this, and I'm not giving it out for free on YouTube. If you're in the mentorship, you will be learning this after, because this video is, I think, before we learn about the strategy. And then you target, here's your, let's say you target a 1 minute liquidity point. Here's a liquidity point. You could easily get 1 to 4. This is a really aggressive trade, so I'm just marking out an entry based on my entry. I haven't analyzed if it's a good trade or not. I'm marking this out just to show you how you would backtest. You would mark this out. Also, yeah, so that's basically what you do. You analyze, and because I trade liquidity, I wait for liquidity to be swept. You don't need to wait on the 1 minute time frame and watch very, very slowly, like, oh, how's the market moving? You just wait for the liquidity, and then you skip through. see um, your entry confirmation play out, or what would be the word? Watch out for your entry setup. Wait for your entry setup to play off. So let's say it played out in here, and then you wait for your reaction or to tap your area of interest, and then you would enter. You would click on at least on this website. You would click on your position, open position. This is an example. I can actually enter this. Wait, if it lets me. I think maybe it's glitched out right now. Okay, well, I'm late on this, but let's say I entered like this. Okay, it's entering here, but let's say I entered just to play this out, something like this, 1 to 2, I think it is, whatever. Because it's entering here, not where I would have entered. Let's say that you enter like this, and then you just let the trade play out. You press play and you watch how it plays out. So then let's say here you'd have hit stop loss. So that's where you know. Here on the bottom right, you have your position, which is, I mean, your total where you lose. So then you wait again. I had this point of interest marked out from the start. So then I see, let's say if I see something good happen and I enter again here and I say, I like this. So then you would put your stop loss. I'm just putting random stop losses. You would make your TP. You would enter again. You would enter again, and then you just let it play out again until you hit stop loss or TP. So once you play it out, if you don't hit anything, you let it play. If you hit something, then there. So as you can see from the first trade, my direction was correct. So based off of this, or based off my strategy, obviously I'm still back testing it to make it even better. This was an entry, like I said to you, and I don't think I would have hit break even. Break even is like a 1 to 1. Um, I might have in this situation right here. After this, I might have, like, again, I'm being honest with you. When I see this, I might have moved it, might have not. So this trade would have either been a 1% loss, or I would have moved my stop loss about in here, because I have this new point of interest formed here after my entry, and then from here I would have been probably about half of my risk lower, so I would have lost only half of what I risked. Here is again a re-entry. Here the entry was actually bad. I entered late, because I'm just showing you an example. I'm not trying to perfect my entry. And as you can see, the first direction was correct. So, like with my strategy, if I see this point of interest here and I see my entry setup, I would enter. And because it's an aggressive, how to say, because it's an aggressive strategy, really, as you can see, really tight stop losses. Sometimes the trade plays out, but it plays out. These sicknesses are not good. It plays out from a different kind of from a different area. I was like, maybe this would have worked out because it's CPI. I always say to you, like, I'm not gonna lie to you. I'm showing you the real way of trading. The setup looked good, even if I checked it in a second. There was a liquidity sweep and a good setup. This was a really, really good setup to sell off, but it didn't, and it looked like it was selling off good, like with 3 down candles. But again, like I said, with CPI news and big news in New York session, London might move a little bit worse, or it can be more volatile. And as you can see, maybe it would have been good, but then because it was so volatile, just the buyers just blew past the first stop loss. And then my second entry would have been either this candle here or this big candle with stop loss under here. So you've hit a 1 to 3 100%. If I enter on the big one, to be realistic, knowing me, I might have even entered on this candle if I was a bit more aggressive. That's a 1 to 10, but I would have never went for a 1 to 10. I would have went for, on this account that I trade, I would have went for something like this to the liquidity point, or this liquidity point here. So about a 1 to 5, I think, in there. But if you're trading normally, let's say we've held it. This is our trade. So we said something like this. Yeah. So then you let it play out. I think we're gonna go for stop loss now. I wouldn't be surprised. Um, let's see. At this point, you also have to be realistic in your trading, you were up like one 1 to 3 or something, you would have moved your stop loss to break even long time ago. So this trade is either now you get missed, you take profit by literally one little touch, um, you miss out on your profit, or you hit break even and this trade basically never happened. So we let it play out. Are we gonna hit the break even? Yeah. So then that's what you'd have happened. You would have lost out on your profit and hit zero. Just trade never happened. Whatever. Um, Also, obviously, there I see reasons why it went up to the stop loss and stuff like that. You have a 5 minute POI, 5 minute holds more power. So you entered on the 1 minute, and the 5 minute retraced because it had things to fill in. Um, let's say you reopen it and now you have a rejection out of the 5 minute. You open it. Let's say you trade 5 minute time frame and you saw a really good reaction from the 5 minute time frame. You would enter your trade something like this, maybe even tighter because you're moving with volume. So you've already had your drop, maybe something like this. Then you enter your position quickly. I'm doing random stuff because, like, I'm not sure my entry and I'm not looking for an entry, but this is, I don't know your strategy, but this is a strategy. Let's say it makes sense. 5 minutes, and then you have a good reaction, so you enter. Then the trade plays out. Here, you move it already definitely to break even because, or at least lower. If it retraces, it's going to retrace all the way back to your stop loss. So you move your trade, you can move it to break even, and then you let it play out. There you go. Now we've hit break even. You wait for another setup. Maybe you entered. Let's see. Where's the 5 minute? Let me just mark it out good to see. You have this one, but you also have the pink one. Yeah, you basically have to just trade it like you're being real with yourself. You move your price to break even where when you know you would. So if you have rules at 1 to 1, you move a break even. If it's at 2 to 1, you move a break even, whatever, or you don't move a break even. It doesn't matter, but you have to stick to your rules on backtester that you will implement on your live account. Okay, so let's say we got a retap of that 5 minute, which is the pink one. If you use the pink one, and then you would have entered again, you mark out your entry, you take your position, and then you just let the market play. And then you watch how your strategy, if it works. So let's say I see here, okay, my strategy doesn't work. Entering off of 5 minutes is not good. Or you learn, oh no, having a really tight stop loss is not good. I prefer to have a little bit of space in my stop loss. Then the next time you do this, you win your next trade, or you lose it. Let's say if you're completely wrong, you see here, oh, I'm completely wrong. The trade is going against me. Okay, then you need to analyze. You open the 5 minute, you check what's happening on the 5 minute, you check what's happening on the 15. Why was I wrong? Oh, okay, I can see here we blew out of Asia high, then we retraced the Asia high, and we reacted off the POY. So it's a continuation to the upside. Oh, I didn't see that. Okay, so on the 5 minute, then you make a rule for yourself, like in your head. When I see a Asia high get broken, it looks like a liquidity run, I will be careful because maybe it's a continuation to the upside. Then you let the market play out. If anything happens, you could have entered. If not, you watch. Oh yeah, so I see I was completely wrong in my cells here. Maybe the cell here worked nicely around, where was it? It was this cell here, because I said you can enter and win against I win in a counter trend. Asia got broken through. After that, your cells were wrong. So then you analyze. You took your first win. You analyze, why did you win? Okay, I won because we blew out of Asia session, and we were waiting for a retracement into the Asia session. Okay, into the Asia high slash Asia range, which is in here. So then when you were up here, you still had space to drop. So that's why this trade worked out. Then you say, why did this sell not happen? Because the sell-off happened already to Asia, and then Asia broke out here, showing you that it's going to be buys. And then after it retraced, it started to rise again, showing you the continuation is going to happen. So then you know Okay, my strategy here on the left worked because I had the right direction, but here it didn't work because I didn't have the right direction. So what's the problem? The problem is understanding the direction at different times and being with the market. So that's how you backtest. You have to have your strategy set plain and simple. Here I showed you random entries because I don't know your strategy, I know my strategy. And when you backtest, you need to backtest realistic. You risk only 1%, as you can see at the bottom. We took two losses and one break even, so we've lost 2,000. You do not risk 2,000 on one trade, 3,000 on another trade, 1,000 on another. No, you stay at 1,000, and you see the numbers that the statistics pull in. Here, let's say this was 1 week of trading. I look at the balance, and the statistics show me that I'm in a minus or below. I'm below my starting balance. Means what? Means my strategy, my mentality, because you could be entering random trades, your analysis, your direction, your risk to reward, your something is off, and you need to fix it until you're entering trades with the same strategy, same risk, same session, preferably. You can enter New York as well. Same or also plus or minus. I do sometimes change my ors depending on what I see. If I enter a sell and I see that my liquidity point is, for example, my I want to go for like a 1 to 3, 1 to 4, but the next liquidity is at 1 to 5. I will put it to 1 to 5, not, but I wouldn't go so high as 1 to 7. But that's sometimes now I'm advanced. I know how my strategy works. I can change my OR. But for you, you stick to it. For example, you say, I only enter in for value gaps. I only enter after Asia high gets swept. I only enter between 9 and 11 o'clock my time, let's say 8 and 10 UK time. I only enter when there's no red news during London. I don't trade on days with very big news. You need to learn which ones are big. I don't enter, for example, if the 15 minute is bullish. I don't enter sells if the daily is showing buys and the 4 hour showing that. You make your rules while you're backtesting and see what works, what doesn't. So that's how you backtest. There will be more videos on how to backtest, and we will go through them more and more. So I'll see you in the next video. This was YouTube and a mentorship video. I do have the link to my Discord in the description, so I'll see you there.